Hey guys, it is Julie here with TipRanks, and today we're taking a look at a couple of the best rated stocks of the week. So let's get into it. All right, guys, welcome back. Thank you all so much for being here, and TGI Friday. Today, we're taking a look at a couple of trending stocks, specifically the best rated stocks of the last couple of weeks. These companies have been picking up a lot of attention from Wall Street analysts, and they think there's some pretty big upside potential ahead. So we're going to take a look at these companies, what's been going on with them lately, and what those analysts are predicting for the stock's future. We found these stocks over on the TipRanks Trending Stocks page. Found underneath research tools, here we went to the trending stocks and looked for the best rated over the last 7 days to get our list of companies down below. And just before we get into today's stocks, this is your friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app so you can access all of your favorite investment research tools on the go by following the link in the description down below. Now let's get right into our best rated stocks. First up, we're taking a look at Datadog. They trade under the ticker DDOG, currently priced at about $115 per share. Over the past year, they've gained 27.5%, though they are down 4% in the last 3 months. They've made some modest gains here in the past week. Datadog provides a monitoring and analytics platform. They are the observability and security platform for cloud applications, integrating and automating infrastructure monitoring, application performance monitoring, log management, real user monitoring, and many other capabilities. Datadog is used by organizations of all sizes and across a wide range of industries, and helps enable digital transformation and cloud migration, drive collaboration among development, operations, security, and business teams, and accelerate time to market. Datadog is trending with Wall Street analysts as the company did just share an earnings and revenue beat for their second quarter on August 8th. They saw growth across the board. For their Q2, they reported earnings per share of 43 cents, beating expectations by 6 cents per share and growing 19% year over year. Revenue grew 27% to $645 million, and they also saw strong growth of their larger customers, with their 100,000 plus annual recurring revenue customers hitting 3,390. That was up from 2,990 a year ago. They said that during their Dash 2024 conference, they announced dozens of new products and capabilities, delivering innovations to help their customers observe their environments, secure their infrastructures, and workloads. They ended the quarter with a strong cash position of $3 billion and also increased their full-year outlooks. Following that report, we've had 13 analysts weigh in just the last 7 days, one of them being a 5-star analyst from Bank of America Securities. They reiterated their buy rating on the stock, noting the company's upward revision of their revenue and non-GAAP operating income forecasts, indicating a strong and consistent financial performance. Additionally, positive trends such as increased adoption of multi-product offerings, growth in emerging products, and the rising use of AI-native inference workloads substantiate Datadog's competitive positioning in the market. And Bank of America is not alone there. Overall, the Datadog stock has 26 current analyst ratings, coming in as a strong buy with 23 buys and just 3 holds. Analyst average price target comes in at $144, which would imply an upside potential of 25.8% from current prices. Down below, we can see those most recent ratings coming in as recent as yesterday here at 36% upside from Bernstein. Closer to that earnings report, we have a lot of 5-star analysts weighing in on the stock. Our high-end price target is $160 from Loop Capital with an upside of nearly 39%, while our low-end price target is a hold from Moness with a downside of nearly 15%. And the second stock that we're taking a look at today is NICE. They trade under the ticker NICE, currently priced at $175. Overall, in the past year, the stock has fallen 10% and is down about the same in the last 3 months. However, in the last 5 days, it has gained 11%. NICE provides enterprise software solutions and services, helping empower organizations of all sizes to deliver amazing customer experiences everywhere. Their unified open cloud platform, CXone, manages 100% of customer interactions, tens of millions of conversations every day, from voice to next-gen digital and AI chatbots, enabling organizations to orchestrate the complexity of modern customer experience on one platform. And NICE has had a lot of updates for us lately. Just yesterday, they came out with their latest earnings report, where they had both an earnings and revenue beat, plus updated their future outlook, and they also appointed a new CEO. For their second quarter, they reported earnings per share of $2.64, beating expectations by 6 cents per share. And the company also saw 26% year-over-year cloud revenue growth. Total revenue came in at $664 million, which increased 14%, and the company accelerated their share repurchases to $146 million. With the quarter, they also raised their full-year earnings per share guidance. The growing adoption of their extensive and innovative portfolio of AI solutions fueled an all-time record quarter for CXone bookings. And they appointed Scott Russell as their new CEO, who comes with over 25 years of experience in enterprise software and a history of leadership roles at SAP. There has been a dozen analysts weighing in on the stock in the last 7 days, pretty much all within the last 24 hours, including one analyst from William Blair. They said despite a challenging market environment evidenced by competitors like Five9 revising their revenue guidance downward, NICE managed to maintain its full-year outlook and targets for organic cloud growth. The company demonstrated strong booking trends throughout the quarter with sustained momentum into the third quarter and have seen a significant uptick in AI adoption, with bookings for its features increasing 134%. The NICE stock has 15 current analyst ratings and does come in as a unanimous strong buy. And the average price target is just shy of $270, which would imply an impressive upside potential of over 53% from current prices. Looking at those recent ratings down below, we do have a couple on the high end here, both at $300, which would be an upside of 70%, while our low-end price target is back here in June from Rosenblatt at 28% upside. So that is a look at 2 stocks that are part of the best rated stocks of the last 7 days. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at. Thank you guys so much for watching. Have a wonderful weekend, and I'll see you back here next time.